The U.S. Department of Justice announced today that it has opened an investigation into the failure of Silicon Valley Bank following the bank's takeover by federal regulators. Now, this comes after the Fed's announcement late yesterday that it has launched a review into the supervision and regulation of the bank. And lawmakers on Capitol Hill are also getting in on the action, with Democrats pinning part of the blame on former President Trump. I'm sure before it's over, climate change will be somewhere in the mix of causes. Well, joining me now to discuss this is Congressman Warren Davidson, who serves on the House Financial Services Committee and the Select Committee on the Economy. He represents the 8th Congressional District of the Buckeye State. Congressman Davidson, welcome back to the program.
Always an honor, Tony. Great to see you.
So let me get your response, your thoughts on what has happened over the last few days, beginning on Friday with the Silicon Valley Bank shutting its doors. Now the federal government stepping in with what former FDIC Chair Sheila Bair calls a bailout.
Yeah, look, the problem, it's sort of like the train derailments that happened in Ohio. All the good options go away once the train derails. The right thing is keep the train on the tracks. With banks, there's not really supposed to be drama around banks. And that's why we have so many regulations around banks. And where were the regulators? Who was overseeing this? And as you start peeling into the onion, they made some particularly bad decisions at Silicon Valley Bank. That's a management failure. It is a regulatory failure. But the other thing is, what caused the run? No one's really looked into it's because of Twitter. Well, what were they saying on Twitter and why were they saying it? There's two factors there. One is, fear driven, by misinformation. And then the other thing was truth based on interest rate risk management. And that was a particular failure at this bank. They had bought long-term bonds when interest rates were really low. And when there was a demand for cash, that's the part of why were people demanding cash all of a sudden. Then they had to sell these bonds at a discount. And then once that became public, that they were taking a big loss on selling these bonds, then it pushed even more people to ask for their cash out of the bank. 42 billion withdrawn in 36 hours, pretty overwhelming for a bank with only 200 billion in assets.
When you look at government action, and as I mentioned, some are saying that this unprecedented action by the FDIC could be problematic itself. If you go back to what you were talking about with interest rates, inflation, it was government spending, the infusion of trillions of dollars into the economy that caused inflation to go up, causing the Fed to raise interest rates, and now the bank having to sell short and at a discount. All of these things have consequences. Are we really thinking through the consequences of the actions that have been taken over the last 72 hours?
Yeah, I mean, the reaction all goes back to part of the recognition of a failure back in 08, 09, when you created, some banks that are too big to fail, they're going to bail them out. Where would people go? Well, they would pull money out of smaller community banks and flee to these banks that are too big to fail. Some of my colleagues think that the solution is to make every bank too big to fail. And some of us are going, well, how do we go back to the status quo of no bank is too big to fail? You have to take risks. But fundamentally, depositors, that's why we regulate these banks. Depositors shouldn't have to fear that they're going to lose money because we get the regulation right, because the law is good and the regulators are there on the watch. They shouldn't fear for their deposit. At least the right thing did happen, whether you look at the FDIC or the Federal Reserve's actions. I can't say they're good options. They may well be the least bad options because the shareholders did get wiped out. The people that lent money to Silicon Valley Bank got wiped out. So the people who really funded this bank were wiped out. Now, there were some big depositors there, but the people that were standing in line wanting to get their cash out of the bank, wrapping around the block, those weren't like big tech billionaires. Those are, regular working people that just kind of, hey, what's going to happen to my money? And they were really worried. So I think that you can make the case that the lowest cost to taxpayers was to create stability, make sure there's no fear. And what does the Federal Reserve do? The Federal Reserve lends money to banks. And fundamentally, they're lending money to banks. Now they're taking a risk that they're not going to get paid back because they're paying face value for the treasuries that they sell. But again, their risk at the Fed isn't like 80%. Their risk is, their collateral is the Treasury. So whatever that haircut is, 5, 10, 20% at most, that's the risk to the Federal Reserve. So the least bad option may be what they did. Initially, it looks like a lot of the contagion has been contained, and the emphasis is on a handful of banks, which is where you would want it, like banks that particularly did a particularly bad job of navigating this interest rate risk.
Do the ESG woke policies play into this when you look at the policies of this bank? In fact, Silicon Valley Bank did not have a risk, as I understand reading through, did not have a risk officer, but did have a diversity officer.
Yeah, they went without a risk officer. Frankly, for most of their hires, all of them were diversity hires. It seems like they couldn't get enough wokeness into the bios from some of the things I read. But they went without a risk officer from April till January. And I think the ESG kind of agenda, where did that play? We're particularly concerned that it was with the regulators. I mean, they've been worried more about climate risk and sea levels than about interest rate risk. The immediate problem in the macroeconomic environment we're in today, whatever you believe about climate change, the immediate problem is interest rate risk. And Silicon Valley Bank did not navigate that risk at all. I mean, every household I know did something to manage interest rate risk, whether it was a car loan, a mortgage, credit card bills. They navigated interest rate risk better than this bank. Where were the regulators?
So were they distracted because of the ESG policies that they were pursuing?
Well, that's one of the plausible explanations. So we're drafting memos now, subpoenaing and requesting records, and then also records. Were the regulators pressuring them to debank some people? Because if you've heard of Operation Choke Point, there's a big feeling that there's an Operation Choke Point 2.0 going around, a next round of that. They did it under the Obama administration. Even Barney Frank said that his bank, Signature Bank, Barney Frank supported S2155, by the way, the bill that they're all saying it's Trump's deregulation. That was a bipartisan bill. Barney Frank, the Frank part of Dodd-Frank, Democrat member of Congress when he was in Congress, supported that bill. And he was also on the board at Signature Bank. He's saying that is not the thing. Two things did happen. We did deregulate some banks, and some banks failed, but they didn't fail because of this deregulation. He's certainly not going to defend Donald Trump, but he is telling the truth on that.
So, Congressman, the FBI announcing they're going to be investigating DOJ, getting into this. Is that going to interfere with Congress investigating and looking into what took place as it pertains to regulations?
Well, once we request the documents, they're obligated to hand them over to us. I mean, frankly, we might as well go ahead and subpoena the FBI and get all their stuff. And generally, they want to say, no, it's an ongoing investigation. We can't comment on that. That's a fake line. Any of that can be shared with Congress. And, fundamentally, we need to actually stop allowing that excuse for inaction by the deep state, frankly, the lifetime bureaucrats that think they run this city and this country rather than the people that get elected to represent it. These guys haven't been elected to anything. And even when we get elected members in office and we try to shape the organizations, they just say, hey, we'll ride it out. And they kind of do their own agenda. And that's not just the FBI, that's across the bureaucracy. I think that's really one of the big problems.
Yeah, I've seen this pattern has emerged every time since the elections and the Republicans have taken the majority in the House. Every time something comes up, whether it's classified documents or this or that, the DOJ jumps in prior to Congress in that excuse is, well, it's an ongoing investigation. We can't give you that information. So I do hope that you are able to press through and get this information so that, in fact, it is contained and we make sure that we correct whatever led down this path. Congressman Warren Davidson, always great to see you. Thanks so much for joining us.
God bless you, and shame on Joe Biden. Woe to those who call evil good and good evil. I'm glad you're highlighting his views on transgenderism.
We're going to be talking about it a lot later, so in fact, we'll catch up with you on that as well.